Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. And let's take a look at how the markets are faring right now. You have the benchmark indices that are losing a bit of ground. That's par for the course because you've seen quite a bit of chop and churn in the global markets. And you have the benchmark Nifty 50 that's trading with cuts of about 0.4% or just about 0.3% or thereabouts. And let's look at the key contributors because that's going to give you a picture of what's moving and what's not in trade today. Reliance Industries lending a little bit of support to the benchmark index, but on the other end of the spectrum you have HDFC Bank, the heavyweight on the Nifty 50, which is losing the most ground, followed by ICICI Bank and Sun Pharmaceuticals, ITC also contributing to the losses right now. Among the sectors that are in focus, you have Nifty Bank, understandably, which is losing ground on account of HDFC Bank and a few others. It's down over 0.5%. And you have Nifty Finance, which is also losing about 0.6% or thereabouts. Among the sectors that are gaining in trade, few and far between, 0.4% gains for the Nifty Energy Index, as well as gains of about 0.3% for the Auto Index at this point. Now, we are focusing on a few stocks today, and among them, of course, is Vodafone Idea. And the reason is we spoke about the fundraise that was around the corner. In fact, that has now been confirmed, and the stock is down about 4.5%. It was, in fact, Smriti's news break. So who better to tell you about it? Smriti?
Well, yes, good morning, Alex. You're right, the stock is down about 4.5% as we speak, even though the company has approved a follow-on public offer. Now, this follow-on public offer goes live on April 20... Just a second. Next week, it goes live next week and it opens on April 18 and closes on April 22. There are also going to be anchor bids and that we'll see on April 16. Now, just to give you an idea, this is an 18,000 crore FPO. The promoters have already infused, or the board has approved the infusion of about 2,075 crore rupees. We looked at the equity dilution for this. For the FPO price, it's the cap for that is 11 rupees a piece, and the floor price is 10 rupees, which is also the face value of the share. However, promoters infused equity at a higher price, at a premium of 14.87 a piece. Now, we looked at the equity dilution based on these numbers, and it comes out that the dilution on an overall basis will be around 26%. So that's a massive dilution. Promoters' stake, however, is going to stay the same at around 10% because they're infusing capital as well and at a higher price as well. So it's a positive in a sense for the shareholders because they're getting more money. But if you look at the government, which is the biggest shareholder in the company, their stake is going to come down from 33% to 24%. But the question remains, should you buy into this FPO? Because if you're holding whatever shares you're currently holding, there's going to be a dilution in that up to 26%. And to talk more about this, let me introduce you to the guests for today. We have Dalal of Natverlal Sons and Osho Krishan of Angel One. Welcome to both of you and thanks for joining us today. Samir, lots has been talked about Vodafone Idea FPO and finally it has come out with an FPO. Now, the sources have told NDTV Profit, we broke the story on Wednesday, that there is some investor interest in this as well. The company's plans to utilize these funds is towards infrastructure, so essentially expansion of 4G and setting up of 5G services. They're also giving certain targets like increasing of revenue from 40,000 to 75,000 crores by FY26. Now, looking at overall picture, how are you viewing this from a longer term perspective?
So for Vodafone, this is something that is very important that they do because they're burning through capital and they're running short of it and they're not able to compete in the markets. Look, when you have everyone else moving to 5G services and trying to improve their speeds and things like that, Vodafone has been falling back on that. Of course, the transition to 5G has not been as fast maybe as people thought, but it will pick up steam. So Vodafone desperately needs that. Now, if it comes to shareholders, if you ask me, I'm not very keen on putting money into Vodafone, and I wasn't even back in the day. No doubt the stock has given a superb rally. It went up all the way from 7 all the way to 14 or 15, and now it's back down to, of course, 12.5 or. But my simple problem with Vodafone remains is that, look, you're losing subscribers to your competitors because you're slightly higher prices and you're not able to compete. Secondly, the company continues to lose money, like you're making losses. Now, this 20,000 crores will definitely help them for the time being. But if I'm a shareholder, I'm looking at where am I going to make money at the end of the day when I put this kind of money into the system. I mean, into Vodafone as a company, if you're going to continue to make losses. So I don't see the near-term upside. Maybe over the next 2 years, when they're able to turn around their operations, if they're able to turn around their operations, then we can look at it. But at this point of time, I'm not very convinced that I would want to be a shareholder in the company. So I'm not for it, but Vodafone desperately requires it.
Okay. That's interesting. So, but then going forward as well, suppose you're not an investor and you're looking at the telecom space as a whole, since we're talking about Vodafone idea, what would you put your money in? Would you invest in a telecom company at this stage, or would you avoid?
So I do like telecom companies from the long-term point of view, because at the end of the day, the kind of digital push that is coming, the things that are moving online. So without telecom, there is going to be no future, right? So we need it. Now, the beauty of the play is that there are basically 4 players remaining. Reliance, that's Jio, Bharti Airtel, Vodafone, and BSNL. Now, BSNL, of course, unlisted, you can't really look at it. So the only other way to probably look at it is through the Jio and the Bharti investment. I mean, Jio and Bharti. So for me, the way I would like to play it is probably go through the Jio, because what they have done is been able to become the largest player in the space. They still have the lowest pricing. No doubt Bharti is also a play which caters to international markets. You have the Africa operation. So as the telecom penetration there also continues to increase, I'm sure Bharti will do well from that angle as well. They'll probably be able to increase their return ratios and profitability and the access, so on. Of course, there's Bharti Hexacom that's listed today. Of course, that's an option, but I haven't studied in great detail, so I don't want to get into the details of that. But the way I would play it is probably buy Reliance. But the problem with buying Reliance at this point of time is you're buying a lot of the other operations also. And the valuations for Reliance for the retail business and also for the oil to gas business, I'm not too comfortable at this point. The stock has seen a good run up. So probably in the near term, I would not look to put any money there. But yes, I am very, very positive on this telecom space. So we will have to look at opportunities. We do have Reliance holdings already. So we may not add, but we need not sell it either. But Reliance would probably be the way I would play the telecom space for the next 2 years.
So Bharti Airtel seems to be the pick for the Jio as well. Yes, I mean, considering the valuations are high in terms of pure play. Yeah. But let's start off with the questions now. And just to remind you, if you haven't written to us, you can write your queries to the WhatsApp number that's on your screen, or through the YouTube live chat, or even through any of our social media channels. Let's begin. The first question is from Mohit from Gujarat. This is for you, Osho. Now, they've bought a put option for MCX at a strike price of 3,800 and they've bought it at 54 rupees a unit. What should they do is the question.
Firstly, very good morning, Smriti and Alex, both of you. Well, now coming to the question on MCX, then looking at the overall trend for MCX is trading approximately around its 52 weeks high. So I won't be, it is a very surprise that why we have taken a put position over here, because after a breakout from the recent period, yesterday it has seen a very strong volume-based breakout. So we are expected that from here onwards there can be a strong rally towards 4,100 on immediate basis. So as we have seen a very strong breakout, so it's better to exit the put option for the time being. The time we witness some kind of stagnation on the higher levels around the zone of 4,100 to 4,150 odd levels. Then from there onwards, if the momentum breathes out, then from there onwards there can be some kind of profit booking, but I'm not expecting a very drastic downfall in MCX for the time being.
All right. Mohit has got the next question. This is another Mohit. This one's from Ludhiana. And he's asking about Coal India, which he's bought at levels of 152. And he's looking at a 2-year time frame. Samir, what would you say about this particular counter? And from the perspective, I would think that thermal power in India is not going anywhere. Particularly given the government's plan on renewable energy and the kind of capacity that is building there. I think a lot has been said about the fact that India is not going the way of certain other countries and jurisdictions which have moved whole hog to their detriment to renewable energy.
So you're very right that you said that thermal power is not going to see massive growth, but I don't think any country, especially India, as a country, can do without thermal power, right? Because when it comes to renewable energy, there's always going to be some periods of time where you may not be able to produce the kind of energy that you need at that particular point of time. Which thermal is something that you can use to, you can predict how much you're going to generate. So for me, thermal is something that's going to be a significant part of India. Yes, growth probably will not be as great. Now, when it comes to Coal India is very clearly guided that their volume sales growth for the current year will be about 6 to 8%, anywhere in between. And going forward also, I don't think we should expect too much higher volume growth when it comes to Coal India. So now you're taking a call on whether prices of coal can move up, because there are two things in a commodity company that can drive your profitability. One is the volume increase, and the other is price increase without significant cost increase. And for Coal India, the cost increases are not significant given the fact that they have their own mines, right? So if you ask me, it's a play on pricing. And that's a call I don't want to take. So if I were an investor in Coal India, and especially this investor who's bought it at around 150 is making good amount of money, I think there are better opportunities in the market. I would like to say it's time to probably book out profit. No doubt PSUs are a hot thing. And, no doubt Coal India also is a good dividend yield company. It gives about 5% dividend yield even at this point. Valuations are not very, very expensive. But I think they will not re-rate significantly given the fact that growth is only going to be 5 to 6% when it comes to volumes. So I would probably book out of it and look at other investments where I could probably make better returns over a period of time.
Right, fair point. Let's take up the next question, which is from Raj from Chennai, and they're talking about Adani Wilmar stock. Now, they've bought the shares at an average price of around 400 rupees a piece. Now, this is from a longer term perspective, and this from 3 to 5 years. That's the time horizon. And Sameer, would you have coverage on this stock?
Don't have coverage on Adani. Sorry.
All right, let's take it. Let's take a technical view on this then. Osho, for somebody who has bought it at an elevated level of 400 rupees, and from a longer term perspective, what would you suggest them to do?
See, overall the counter is into a corrective phase, so there has been no strong signal of reversal on technical perspective as of now. But there has been a breather from the corrective phase, so it has been consolidating in a very narrow zone from the zone of 320 on the lower side and approximately 400 on the higher end. So we have to be very watchful. The time it surpasses the zone of 400, then only some kind of reversal can be seen. In the medium term perspective, for short term duration, there can be some in between movements from 320 to 380 approx level. So there can be some in between consolidation, but the time it surpasses decisively above 400 zone, then only we can have some strong traction in this counter.
Standard disclaimer here, Adani Wilmar is part of the Adani Group, and so is NDTV Profit, which, as you know, is part of the NDTV Group and is owned by Adani Group. Let's talk about the next counter, which is UPL, or in fact any of the chemical stocks. This is a pack that has been beaten down, and for very well documented reasons, and that's because of the global downturn or slowdown in chemicals. And we've got Tarun Agrawal, who's writing in from Ranchi, and he's asking about which one or two chemical stocks he should buy at this juncture. Sameer, one would think that you would buy into these stocks knowing full well that it will take a little time to recover. And with that perspective, which ones would you suggest?
So I think we've gone through a lot of the period of time where you think that, now it will take some more time for it to start showing an uptick. I believe the worst for the chemical sector is more or less done. They've all gone through the adjustment of their overstocking, overcapacity, price correction. I think now what you're going to start seeing is maybe the realizations for some of the chemicals will start moving up as companies have completely destocked and will start picking up more inventory over a period of time as growth starts to accelerate. So I would be positive. I'm not of the camp that says it may be another year. I think it'll probably be sooner than that. So two stocks that I do like, of course, one, since you brought up UPL as a stock, UPL is one of the picks that we do like, but it would not probably be the preferred pick in the industry. It is the largest agrochemical company in India, and they're talking of listing another subsidiary of theirs. So that could be a value unlocking play in the near term. So that is something one can focus on. But the two companies that we like from the chemical space, where there's a bit of differentiation, where they're more specialized chemicals. One is Balaji Amines. So Balaji Amines is a small kind of company. They're specializing in amines of different products. And that apart, they're going to be setting up a manufacturing unit for making a particular chemical, which is going to be going into electric battery manufacturing. Now, that is going to be a complete replacement of imports that is happening in the country. So we believe that as that happens over the next, say, 1.5 years, the stock will see good volumes outtake and margins will remain firm. So Balaji Amines is one of them that we like. The other ones we like is Clean Science Technologies. Now, this is also a very differentiated chemical kind of a company. They're doing really well. Yes, valuations are not very, very attractive in the sense that they're not cheap, but we believe as the turnaround in pricing happens, as the new capacity that they've set up starts seeing more traction, and you see sales volume increasing, and their capacity is already up, unlike Balaji Amines, who's setting up Clean Sciences, the new factory is already up and running, and they'll start increasing the volumes there. We believe the profitability will increase and the valuations will start looking a little more reasonable over the next 6 months. And we believe that stock has seen a healthy correction from about 2,700 odd levels to about 1,300 odd. So we feel the price could probably move up to about 1,600. So if you ask me in order of the three, Clean Sciences would be for the 1 year view, Clean Sciences would have the most weightage, second Balaji, and third UPL.
All right. But let's take a short break. Stick with us, Samir and Osho, and we'll take more questions on the other side. Welcome back. You're tuned into Ask Profit. Let's begin taking the questions again. This one's on NCC, the counter, and this is from a shorter term perspective. And the question is from Rakesh Reddy. Now, Osho, we've seen about 143% gains in the last 1 year in NCC. But from a shorter term perspective, however, we're seeing the counter losing ground today, down about 2%. But do you see some upside in the shorter term?
See, overall, NCC has given a very strong breakout in the last week, basically on Friday, on the back of strong volumes. Near about 260 odd levels was the zone where it has witnessed a very strong breakout. V-shaped recovery was seen from the zone of nearly 205, 210 odd levels. So there can be some kind of breather because in the last 4 trading sessions, the volume has been very small in this counter. So I'm expecting that this is just a breather in this counter. Once the counter moves towards the zone of 250.55, then again it may attract some strong buying in the short-term perspective. So for short-term, one should definitely wait for some more breather, approximately 5 to 6 points on the downside. And from there onwards, we can again witness a strong upsurge. Approximately 274 to 276 is the first target that one can expect for short-term duration.
Okay, coming back to you, Osho, on this next one, we've got Jai Krishnan from Kozhikode, who's asking about Sunteck Realty, which he's bought at levels of 477 for the medium term. He's asking, should he book losses in this one and move to something like a Kalyan Jewelers, ABB or Rainbow Hotels? Anything that stands out to you?
See, overall, firstly, Sunteck Realty has seen a very decent up move in the last 2 trading sessions from the zone of nearly 380 odd levels, which on the technical side has given a very positive movement, and it is now hovering above all its exponential moving average. So if he can stay put in this counter, then from here onwards, there can be some strong upside movement in the coming period. So I'm expecting a target of nearly 480 to 490 for short-term duration. While on the downside, there is a very minimal or very short demand zone on the lower end. So 420.25 should be acting as a support zone. And on the higher end, I am expecting 480 to 490 to be seen as the first target. Now, apart from it, there, yes, as he have mentioned that there are many other counters which are looking very positive, like in capital goods, which the counters you have mentioned, ABB is obviously in a very strong bull run, but one should try to wait for some kind of consolidation or some kind of time-wise corrective phase into capital goods. Then one can definitely look for accumulation from short to medium-term time frame.
All right. Next up, we have a question from Mr. S.M. Reddy from Hyderabad. This is on Samvardhan Motherson. Now, the question is they've bought the shares at 121. The share is in an uptrend today. It's up about 3%. And this is not the only share within this automotive parts space. We're seeing uptick in other stocks like SKF, Suprajit Engineering. Now, this may be on the back of Tesla's entry into India that we're seeing this these kind of shares gaining today. But Samir, specifically on this stock, would you suggest somebody who's already bought into the stock and to hold on from a longer term perspective?
Absolutely. So I think the auto space and especially the auto ancillary space in India has a lot of growth opportunity. But Sam Motherson Sumi is not a pure India play, right? They have a lot of business that they do overseas as well. So as long as the economy continues chugging along and as long as you are having this shift happening from traditional internal combustion engines to electric, I think these companies will continue to see traction because of the kind of product that they're manufacturing. So I believe the next 2 to 3 years for this company will be really good, and especially I'm very positive on the entire auto ancillary space. You have to select and pick valuation. So no doubt Sam Motherson has run up quite a bit in the near term. So I would wait for a bit of a correction before buying. But the person who's bought it, I say continue to hold. If you have a 2-year horizon, it's a great investment. I think you'll make good returns in the company.
Okay, fair point. Deepthi from Delhi is asking about what large cap stocks she should buy from the next 5 years perspective. And she's got 4 lakhs to invest at this juncture. Samir, we are talking about the benchmark at very close to life highs. Having said that, there are still a few pockets, one would say, where valuations still look attractive. What, according to you, should be bought from a 5-year perspective?
So I would break this up into 33% 3 stocks. The easiest ones, I'd buy HDFC Bank. I believe the valuations there are extremely attractive from a longer term point of view. I think I've been in the market for the last about 20 plus years and I've never seen HDFC Bank trading at about 2.2 times book value. So 1/3 I would definitely put into HDFC Bank. The FMCG space in India is still got a huge opportunity for growth. So I would definitely look at that. And the best way to play that right now, if you ask me, is a company like ITC. Valuations are still relatively attractive. The FMCG space for them is going to continue to grow. They're gaining market share there. Yes, they're a smaller player than some of the Hindustan Unilevers and some of the other larger Nestle's and stuff. But I believe the growth opportunity for ITC in that space is good. They have good profitability from the cigarette business. The demerger of the hotels business kind of is like a discretionary spending also as India, the upper end of India continues to travel more, so the hotel business will continue to do well. So ITC is where I would put a 1/3. And the third counter I would go in for is the infrastructure space, because look, the government of India, I mean, the current government, which is going to probably come back to power, is very keen on spending on the infrastructure space. And the best and the easiest way to play that, whether it's infra, whether it's defense, is L&T. L&T caters to both of these sectors in a very strong manner. Yes, the stock has run up. Yes, valuations aren't cheap. But since you're saying you have a 5-year view, I think any correction in L&T would be a great buying opportunity. So if you had to ask me, 3 ways as where I would break up this money: HDFC Bank, ITC, and L&T.
We've spoken quite a bit about Vodafone, but then we've got an interesting question from Vibha. She says that she bought Idea shares at IPO. She's got 100 shares now that it's Vodafone Idea, and she's saying that if she sells right now, she gets 1,300 rupees, which mostly can be spent on ice cream now that it's summer. The question is, should it be held or should it be sold? So since it's a relatively short-term question, Osho, what do you think?
Overall, the trend for Vodafone is very weak as of now. I am expecting that with today's closer below the zone of 13 odd levels, that on weekly time frame gives a breakdown in this counter. And on the lower end, I am expecting a target of nearly 10.5 to 10.8 in the short-term duration. So view is negative in this counter, and I am not very much optimistic for the strong growth in the coming period. So better to exit from the company and stay invested in some other good other companies.
Basically, the advice is to go and get the ice cream. Osho, thanks so much for sharing your view. Samir and Osho, thanks so much for taking the time and for speaking to us on Ask Profit. Smriti, from Smriti and myself, it is a good buy on this particular edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.